Hello, everybody. Hi. Um, I can't really tell who's on just yet, so we might give it a little bit of time because I'm sure people are still going to be slowly filtering in. Might give it another few seconds. Great. So, hello everybody. Okay, well, since this is all going to be streamed to YouTube, it'll probably be available to watch also on Facebook, so people will be able to watch after the fact. So I'll just get started now so that we don't keep people waiting too long. So just a quick introduction. Hello everybody. Welcome to the first episode of Fintech and the New Normal, the webinar series that we're presenting here at UCL Fintech Society. So I'm the president for the new upcoming academic year, and in the process of handing over, I was speaking with the previous president, the current chairman, Olivia Wong, and she brought up the fantastic idea that we should really find a way to engage people even during the summertime, even as internships are being put online or canceled completely. School is most campuses are closed at this point. Professionals might not be able to go to work. So maybe we should host something so that people can keep learning and stay engaged and involved. So really through quite a lot of the heavy lifting in terms of logistics and organization on her part, which she graciously offered, and then a lot of work from the rest of the team as well, we're able to put this together. So today is going to be a bit more broad and a little bit less niche than some of the other days in the installment. And I'll be talking more about what those other days will entail towards the end. But today we'll be covering a little bit about fintech as a space, some of the trends that, industry leaders are seeing within them, a little bit about the markets, and then we'll hopefully through that you'll be able to contextualize the rest of the installments as well as some of the other speakers that will be speaking. So just really quickly, I would like to mention that as is being streamed live, people will be able to submit questions. So if you have a question that you think is really necessary or important, do feel free to submit it, and I'll be keeping an eye on those to see if there are any particularly salient ones or any really interesting ones that the speaker might want or be interested in answering. But up until that point, I have my questions ready to ask. So no worries if you don't have that many questions yet, but feel free to put some in if you're interested and if you have any. And please stick around to the end, by the way, because there will be some information about the following installment, and you'll be able to find a bit about crypto and blockchain in that. But for now, without any further ado, let me jump into introducing our very first speaker. So our first speaker is Amy French. She is the head of Level 39. She is currently leading Europe's leading accelerator that focuses on companies working on innovation, whether that be financial, technological, cybersecurity. There's really a whole range of things going on there. And I counted them myself. There are over 150 companies currently based in Level 39. So there's definitely a lot going on there. And so she'll have a lot of interesting insight to talk about, I think, specifically regarding fintech as well, as it houses companies we'd know like Revolut or eToro. So let's welcome Amy French. Amy, hello.
Oh, can you hear me?
Okay. Hello, sorry, can we try that again? I'm not sure if the sound just cut out a little bit just now.
Can you hear me?
Yes, I can hear you.
Great.
Hi, Amy, how are you?
Very good. How are you?
Doing well. Thank you so much for being here. So,
Yeah.
I guess people would love to know a little bit about Level 39, what it is, what you do. So, how would you, I guess, put in a few words, your mission or what you're aiming to do?
Yeah, absolutely. So Level 39 was set up back in March of 2013. So we've been going for a while now. We were launched by the Canary Wharf Group. So that is a property development company, obviously in Canary Wharf. And we were really set up to attract high growth technology driven businesses to Canary Wharf. Naturally, given Canary Wharf is a financial services center and hub, we attract fintech, cybersecurity companies, but we also have a number of businesses within retail tech, smart cities, health tech, and more.
Wow.
And we fundamentally support them on their scaling journey through access to space, but also access to a variety of ecosystem activity that I'll share a bit more with you as well.
Wow. So it must be very difficult to be bored doing your job, I assume.
Every day is definitely different. But as you said, we actually have 200 companies based with us.
Wow.
So it's a big community that is around 1,200 people based across around 80,000 square foot of space in One Canada Square.
Wow.
So it's a lot of space, a lot of people, but it means great things happen there.
Yeah, I believe that. That sounds like a great community network to have behind you. So some people might be younger, some people might not be so familiar with fintech, and we are UCL Fintech. So we'd love for you to talk a little bit about how you would describe fintech if you had to define it, and what's the importance of it to society in general, and what are ways that we can support them, or why is it important to support them through accelerators such as your own?
Yeah, absolutely. So an easy way to describe fintech is financial services and technology. The aim being to improve and automate the kind of delivery and use of financial services. So for us, and the reason that Level 39 supports fintech companies is because it's so important in terms of collaboration. So bringing together incumbent banks that are already in Canary Wharf and fintech startups who are kind of seeking to develop their proposition, which sometimes means collaboration with banks. We also support them through a variety of ecosystem activities. So I mentioned earlier, that support is access to mentors, investors, partners, people that these startups may not have had access to outside of being part of Level 39. It's important because, you might not be able to build that network on your own, especially, we have 48 different nationalities at Level 39. That means, not all of them by any means are founded in the UK. So by being able to develop your network, both in the UK and internationally, it gives you more opportunity to scale and get a global reach.
Mm-hmm. I totally agree with that. And it's so interesting to hear you talk about the necessity of having mentors and a network to really back you up for people who might be just starting out and they need the guidance or they need to help. So currently, as we are, it's a little bit difficult to connect with people in the more direct way that would have been possible. You mentioned that you guys have so much physical space. It's a bit of a shame right now that people aren't able to physically be rubbing shoulders as they used to. So I guess my question would be, do you think that companies are having a tougher time now that they aren't able to interact as directly? What is Level 39 doing to help them continue to have that network and that support in this time?
Yeah, I think it's no doubt a kind of unwelcome uncertainty, the current situation that we find ourselves in. What we've done, and to take your point, I think it probably is quite difficult that you're not able to have that kind of engineered serendipity of meeting someone over a coffee physically at Level 39, which happens quite frequently. We have like a 3 o'clock cookie bell where the bell rings, people come, and people get to talk and interact that way. And there's a lot of knowledge sharing between the entrepreneurs that we have based at Level 39. So what we've done is move all of our activities online. So we already do our office hours and webinars in this kind of format, so online. But we've also launched Digital 39. So that is a platform to bring our community online during this time whilst we're working from home. It's to keep them engaged, it's to keep them collaborating with one another, but also to share their stories, share their insights, share what they've been doing during this time. So if you were anyone that is interested, it's on our website, but it basically has a variety of different kind of resources. So we've also launched our own podcast, bringing together different leaders in the space, different members of ours, again, to kind of share share their story, but we also have a variety of community articles and opinion insights and blogs that our members can share with us. And we, again, have the platform to distribute that out to not only our members, but other people in the community and other startups who might also be facing challenges that, you know, they can start perhaps learning from other people's experiences.
Mm-hmm. Yeah, I'd love to run with that. It seems like that's a really great way for people within the space, but then even without it, to through the website access some of the news and the current events that are going on and really stay up to date on that. So I'd love to carry on with that point and kind of ask you from your perspective, since I'm sure you're seeing a lot of what's happening in your own level 39, but then some of the things that are also happening without it. I'm wondering, you know, what would you call some of the most interesting trends or something that you think more attention should be paid to? What do you see as interesting happening in the fintech space right now?
Do you know what? One of the most interesting things in terms of, especially that's very relevant right now, is education. And how a lot of our members I'm seeing have, especially during this time, taken to kind of offering training and offering resource to support other people in the industry. You'll actually, so eToro, so Henry is going to speak later this afternoon, and he does training. So again, it's kind of training your customers and in a sense, kind of empowering people to understand technology on a deeper level and therefore interact better with it. But one of our members called CFTE, or the Center for Finance, Technology and Entrepreneurship, they have a fintech campus. It's based at level 39, which typically means lots of things happen at level 39 into, you know, bringing events together. But fundamentally, they provide online courses. It's around different kind of technologies within, whether it's in fintech. But again, now what they've done is they've moved a lot of that virtually. So they have a full virtual campus. They have a whole virtual networking tool. They kind of bring people online every day with different themes. And it's just an incredible way to see how people who have been in industry for a long time then move to educating and, you know, bringing kind of financial services to the consumer and allow them to kind of deep dive into different aspects of it and learn more, really.
That's I'm sure that's a super handy tool actually for people to be able to find out new things online and then be trained by their companies or by the services that they want to use on how best to apply them in their own life. I've here got a question from someone, which I think is quite interesting. So for level 39, are you going to be hosting a lot of events through the digital platforms as well? So I guess maybe this person is looking for examples of the kind of things that they could see, or they want to know more about employment within the companies within level 39. Where might they be able to find information about that? What would you recommend people to do that are curious about this?
Absolutely. So we, in terms of kind of opportunities within companies, we have a jobs board on our website, and that you can have a look at that. A lot of our companies are still hiring. You know, even though we're working from home, we're in quite a kind of strange environment, perhaps, if you can say that. They're still hiring. They're still building their teams. They still have big ambitions to you know, grow their teams and continue to develop their products and work with their partners. So have a look on our website, and you can kind of filter through which companies are hiring, the types of jobs that they're hiring for. But on the event side of things, there are lots of events taking place by our members that we share through our various channels. So if you follow us on LinkedIn or Twitter, we make sure we share all of those. But we also, so for our own community, we run online sessions. So one-to-one mentoring sessions with investors, webinars looking at certain challenges that might be being faced by companies, not only during this time, but in the kind of general journey of a startup and scale-up business. But yeah, we certainly share through our channels what's happening in the kind of wider community as well. So it's worth following that so that the person that asked the question can have a look at what events are taking place.
Great. I hope that answered you, Jorge, and thank you very much for your question. All right. Well, moving along, I guess we've spoken a lot about level 39 in specific and what you're seeing from your eyes on the ground. But I suppose something that people might be interested in that I've heard a lot about is a distinction between fintech 1.0 and a fintech 2.0, the distinction between different generations of fintech. I think this might be a hazy concept for a lot of people if they've heard about it. How would you put that? What would you say is the generational difference there?
I think the way I would frame it, and this is probably the first time I've tried to frame it for myself, so bear with me. But I would probably suggest that FinTech 1.0 is the kind of initial rollout of tech-enabled financial services. So it improves people's relationships and experience managing their finances, businesses managing their finances, the rollout of some solutions that support those that are financially underserved. But perhaps FinTech 2.0, as an extension of FinTech 1.0, is, I would maybe split it into three things. If it was kind of the future of FinTech, which is, currently, happening as well. So you kind of have to take this with a side of, I think this is already happening. One being reducing the cost and barriers to financial services. So again, talking about financial inclusion. Perhaps also the kind of drive of development and implementation of sustainable financial services and products. And also making FinTech kind of FinTech for all. So in terms of diversity and inclusion, so making sure that it is fully diverse and inclusive as a sector. We've actually recently been doing some work with a company called Inchorus, who does research into different sectors, but they're currently doing a FinTech sector research. And it's basically around getting real life experiences from people in FinTech around everyday behaviors to really understand what the culture within the FinTech sector is, and basically taking the findings from those research, from that research, and basically, creating the best positive outcome from that, sharing best practices as an industry, and perhaps even making, a kind of, a kind of forum by which people can share their experiences and share what different companies should be doing to support inclusion within FinTech. So it's a couple of those points I would suggest. But as I say, a lot of that is already happening, as I said, with like the Inchorus research, and a lot of members of ours as well are looking at kind of financial inclusion. So I think it's just a further development into that.
Right. Moving more into a space that's less uniform and more diverse. Because as I'm sure anyone who's familiar with finance or technology knows, that there tends to be some underrepresentation of certain groups in there. And that tends to hinder more than help the development of any industry. I think most people would agree. And kind of in line with that, I'm wondering, diversity and inclusion is definitely something that the sector is trying to tackle actively. But would you say there are any other challenges or barriers or obstacles or things that the sector kind of has to overcome before it can really reach its full potential?
I think there are perhaps certain challenges that individual kind of new entrants to the market might have to overcome. I mean, the great thing I would say about the FinTech industry is it's underpinned by such strong foundations. We have a supportive government. We have the likes of London and Partners and Department for International Trade, who do incredible work to support businesses in the UK and internationally, a great regulatory environment. But I think for new entrants within the FinTech sector, what they would need to consider is that trust in financial services isn't necessarily hugely, isn't that massively high. And so new entrants lack a trusted brand themselves. So perhaps they need to consider partnering with brands that are known to kind of onboard customers, and really get the word out about what they're doing and the value proposition that they offer. And kind of following the same line as that would be that unless you have a distinctly different proposition to others in the market as a new entrant, to acquire new customers is going to cost quite a lot. You're going to have to make that very well known, and put a lot in marketing to get the word out, to make sure that people actually start testing what you're providing and what your solution is.
Right. Yeah. It seems like it would be difficult, especially now, for people to get the word out about their products and about their services. But I'm sure a lot of people are interested in entrepreneurship and being a new entrant, in starting a brand and somehow carrying it through until people can really trust it and use it in their lives. And so I'm wondering if you have any specific advice you would give, aside from, focus on getting the word out, focus on marketing, anything else that you would say to entrepreneurs or students who are considering starting a career in fintech, which they might not be able to explain to their grandparents over dinner, how would you encourage people, or what help or advice would you offer to people considering moving in that direction?
I would say, following on from the question that Jorge asked earlier, go to events, meet people, and leverage your network. Speak to people and introduce yourself and introduce what your passions are. But on the flip side, also be open with your network. By being able to, something that I've seen a lot of is that kind of referral, word of mouth referral, which is so important, especially in, the fintech sector, where there are a lot of businesses kind of perhaps doing similar things or working on similar types of products, but they can actually work together. Collaboration is still, and knowledge sharing is still important. And they're still looking at potential opportunities with one another and synergies that might mean that they can provide, a better or more improved service or added services to clients through that collaboration and through that partnership. So if you've got a great idea, talk to people about it as well. Be okay with perhaps accepting some form of constructive criticism, because really it's just about building something that is going to be resilient and something that will be able to scale in the UK and globally. And that really will come from talking to people that perhaps have already done it. I think our mentor network is incredible. And I think a lot of people now offer some kind of mentor or advisory kind of informal roles just by saying, can I have a coffee? I'd love to learn more about what you do and your business and how you got to where you are. And as someone that is potentially going into the fintech sector, find someone that you kind of almost aspire to replicate in a sense in terms of how they've grown their business. Talk to them, see what their challenges were. And no doubt you'll come out of that with some really good guidance and also someone now great in your network.
Yeah, I can see that a lot of the service you provide is actually less tangible than the physical square footage that you're offering in the office. A lot of it is very much, the support you provide and the help less tangible that companies might need, or, recent startups or entrepreneurs might need. I'm kind of curious, since you guys serve such a wide range within your company, a wide range of sectors as well, but obviously a large range of sizes, there's big names that we know like Revolut, eToro, there's even, arms of larger institutions like HSBC or Citigroup that are also in there. And then obviously there's those many recent startups or small scale ups that might also be there. And I'm wondering, do you think there's any differentiator in the kind of service or support they need? Do they ask different things of you? Is the discourse different when you're kind of discussing the services you can provide to them?
Yes, it is quite different, I would say. So earlier stage startups, when they join us, they are typically joining us exactly, to build their networks, to connect to people in the industry. So industry experts that they can kind of bounce ideas off, speak to about their business plans, their marketing efforts, their sales strategies, their hiring challenges. And so that's typically kind of the earlier stage. We'll look at those one-to-one sessions with industry experts. I would suggest scale-ups need something slightly different as well, because, our physical space and what we offer with regard to offices is flexible and scalable space. So as big as you need to be, or, however you change as a business in terms of your footprint within Level 39, we are here to support you. And, we can support you at the pace that your business is growing. And therefore scale-ups, of course, their key challenges are, okay, we're hiring really quickly. We're currently in a 30-person office, and now we need to have 15 more desks in by next week. What are we going to do? And that's where I come in and my team come in, and that's what we're here to solve. We want to make sure that their growth at Level 39 and in Canary Wharf is as seamless as possible. We want to remove any friction, any kind of pain in doing that. And so therefore, like, the infrastructure that we provide is super resilient to make sure that they can get on with what they do best. The environment is super productive, and, it's somewhere that people, when they are joining a team, will look at, okay, what are the kind of benefits of joining this community too? I'm not just going to be an employee of X company. I want to be an environment where I can, if I want to, meet a mentor myself and get a bit of guidance in the kind of area that I'm working. I might want to have a coffee and look out at the views. I might want to play ping pong, or I might just want to be in a meeting room and bring in my colleagues and brainstorm and have an environment that we can do that quietly, safely, securely, and all of those things we make sure that we do. From the kind of corporate side of things, they join Level 39 to fully immerse themselves in the ecosystem. So, we have a variety of kind of corporate members as such, and that's because they are there to build relationships. They have a mandate from within their own companies to, whether it's partner with fintech companies, invest in fintech companies, or kind of, keep their ear to the ground and look at opportunities and see potential synergies with fintech companies. And that's why they join us. They might have thousands of people in Canary Wharf, but they want to make sure that they're part of Level 39 so that they can come in, they can meet people, and they can start building relationships informally, as opposed to kind of that more, I'll come in for an hour and try and meet a couple of companies and then leave and perhaps not have that same follow-up and that same relationship being built.
Mm-hmm. Yeah, and you mentioned that there's a lot of growth happening from companies and you have to move and be flexible depending. Obviously, just now you're talking about the corporate side and they're looking for something a lot different. But for instance, I know a little bit about Bankable, who you have, and they're one of these companies that are currently massively hiring, for instance. And I'm wondering, right, you've mentioned over 200 companies based in, and all these companies are growing. I know Revolut is taking up a huge amount of space as well. I'm wondering, do you guys still have space? Are you going to be able to accommodate more and more people? Is there more growth in the pipeline, do you think?
Yeah, so we started, when we first opened in 2013, we had one floor, and then we've kind of scaled across 3 floors now. The great thing about Level 39 is that we're owned by the Canary Wharf Group. So the landlord is our owner. So if we need more space, we can get more space. But also for companies that are scaling rapidly and kind of want to make that jump to a more kind of scaled option, we now have an option on one of our floors, which is kind of a hybrid between our license model, which is kind of per workstation and on a short-term basis, something a little bit longer term, but it still allows companies to grow. But also any bigger than that, that's where we can kind of support that conversation with the Canary Wharf Group and say, look, if you are now in a position like Revolut were, Revolut obviously grew with us incredibly quickly, and then took space directly with the Canary Wharf Group. They're still part of our community. They still come to our events. They still, have a lot of engagement with us, but they have, I think, 3 floors in one of the buildings in Canary Wharf now. And that's a journey of maybe 4 years, maybe under, just a couple of people through to now hundreds of people in Canary Wharf.
Wow. Yeah. Well, thank you so much, Amy. I feel like this has hopefully given a lot of people an idea of the range of options of things they can do just within fintech, as well as, careers options. They can look through your website and find any number of jobs at any number of companies serving any of the industries that you guys serve. So hopefully a lot of people have learned something about Level 39, hopefully something about the fintech space as a whole, what it's looking like a little bit for now. And so I'd just like to thank you very much, Amy French. Thank you, head of Level 39. A very, very, very exciting accelerator at Canary Wharf. Give it a look if you ever are in the neighborhood. It's very pretty. But yes, thank you so much for being here, Amy.
Thank you for having me, Serena.
Great. So now I'm going to be moving swiftly along to introduce our next speaker, Henry Ward. He is a markets expert who is currently working at eToro, interestingly, one of the companies at Level 39. So it all comes full circle. He's had 10 years of experience and he provides consultation to people who might be taking some of their first steps towards investing in the financial markets. So could there possibly be a better person to talk a little bit about the financial markets to you today, answer some questions, hopefully cover any topics that you might be interested in hearing about? Please welcome Henry Ward. Hi, Henry. Thank you for being here. How are you?
Not too bad, not too bad. You can probably see a little bit of my balcony there at the side. So it's been a beautiful day today. So can't complain. How are you today?
Yeah, we're very lucky. Yeah, same. I've got this, basically the sun still here, even though it's right into the evening. So I'm definitely enjoying this better weather.
It's just nice there. You're speaking to Amy. Is like when I want rooms for my events in Level 29 or Level 39, I go to Amy, and she's the one who sorts it out for me as well. So
it's right. Full circle. It's a small world.
It's a small world, yes.
It is, isn't it? All right. Well, I mean, I'd love to get started talking about the markets, as I'm sure people are interested. It's a crazy time in the markets right now. So before I start talking about any market specifics, I guess, everything, like every second the news changes. Every second there's something happening somewhere, in China, in Hong Kong, in America, something's changing. Where should people go if they feel like every time they blink, they've missed something? What resources do you use? How would you suggest people stay on top of the economy in general, as well as the financial markets?
Well, as you know, the world is very broad. So the easiest way to do anything is actually stay at home. Okay, work from home. So there's no point in looking to trade the Chinese market if you know nothing about it, if you've never been to China and any of that, because you're speculating on markets you know absolutely nothing about. So the best way to start is at home. So one of the things I say to people about investing is you have the likes of the FTSE 100 there. And people are always asking me, Henry, what stocks should we look at? And the first piece of advice I give to anyone is get the full list of FTSE 100 companies, which is very easily Googled. And then for each one, go down through each one of a Sunday when you're doing nothing, because at the minute lockdown, no one is doing anything. So, and go through them all. And what you do is you look out which is trending up, which is trending down. And if there's anything moving sideways, you just put it in the bin. Okay, so that means you're whittling down the which ones are good. Now, the idea is to try find the ones that are trending up, because you will, one, make money as the stock grows, but two, if it's a dividend company, you can potentially make money from the dividend as well. So you're looking to get paid twofold on that one, whereas on the downside, you don't. And also on the downside, you're trading a CFD rather than the physical stock. So they're generally the two ways that you can actually trade them. So, but the idea is to set yourself up, because at the end of the day, if you fail to prepare to fail.
Yeah, I like that. I might get that tattooed somewhere. So you mentioned that there's two ways to trade, and one of them is a CFD. So for the people who might be a little bit less familiar, quickly, could you just go through what that means?
You say quickly.
Okay, I'm sorry. As quickly as possible.
I run courses on this, and people still don't get it at the end of the day. So basically, what a CFD, you have to go back a little further. It's So what is, you're taking out a contract, speculating on the market, but you don't physically own the stock. And what you're doing is you're saying the market is here and you're expecting it to drop down. And as it drops down, you are making money because you placed a sell order on this. And that's effectively what a contract is. But you are subject to a fees, which means, and that's the problem with a contract, is that any contract you ever take out, you have to pay some sort of fees, whether it's finance on a car, whether it's a watch, whether it's your credit card. They're all contract differences. They're a different type of contract, but you pay fees on it. And trading is the very, very same. So when you're shorting the market, there are fees. Now, if you're buying the market with the likes of eToro are commission free, which means then that there's no fees as the market's going up, and we don't charge people spread when we get into the markets. So which means then buying a stock is an all-round just a better idea. But there are some huge opportunities when the market is dropping. Up to a week ago, Aston Martin was dropping like a stone. So that was a great opportunity for a short.
Okay, great. So I guess it works out to bet on something or against something. Either you like it or you don't.
Absolutely.
Like it.
So you're speculating that the markets are going to go down, or you're physically buying the stock. Now you can also trade a CFD long as well, but most people don't, because they want to sit on the stock, hold it long term, and let it run. Whereas if you're buying the currency market, there's no physical currency on the platform, so which means then you have to trade them on the likes of a CFD. But there's loads of opportunity out there at the market at the minute. And just it's whether people have the knowledge to actually monetize what's going on or not, and that's down to the simplicity of it at the minute.
No, that's fair enough. And you mentioned earlier that it's important to stay home when you're, considering the economy. Stick with what you know.
Save the NHS.
Right, exactly. Save the NHS and stick with what you know. So what about the situations where what's happening abroad might impact what's happening at home? Like, to what extent should we stay up to date with news that might impact us indirectly, even if we're not directly trading in, Chinese stock? Should we still be keeping up to date with what might be happening over there, or should we just totally blinders what's happening in the FTSE 100?
Well, see, the thing about it is that you're looking at a broader market. That then comes down to what type of a trader are you? If you're an entry day trader, that really has no effect on you. So what an entry day trader is, someone who will get in and out sometime within an hour or two in the markets, make some money and get out. That's an entry day trader. Now, if you're an end of day trader, you will hold on to your trades a little bit longer, which means then that outside factors, by the time they happen, they can potentially affect your trade. But then again, if you're a long-term trader where you're looking to hold on to trades for 5-10 years, they have no impact on you. So the biggest sort of impact is as a day trader there. That's when you have to start looking at outside influences. You have to have a look. You have to make sure the economic calendar has no major news coming out. You have to start looking into, and you have to start following Donald Trump on Twitter, because nowadays that's how people release news announcements, is on Twitter. Who knew?
Right.
But there's algorithms out there that will have actually linked to Donald Trump's Twitter, and will all of a sudden, if something comes out that they deem negative, that they're already into the market, which means by the time you see it, by the time you react, the market has already dropped.
Yeah, I did hear that actually Trump's tweets are correlated with drops in the market, which is just kind of an interesting idea to think about. Technology is bringing us in interesting directions.
It's funny because I end up was watching Bloomberg, and they just stopped what they were doing and goes, oh, Donald Trump has just tweeted that there's 10,000 barrel reduction on. All of a sudden, I myself jumped into oil, took it long, took a winning trade out, and then jumped out. And then about a week and a half, about 2 or 3 days later, then it dropped down again to where it originally was. So it's little things like that. So these are things that novice traders don't know about. But the problem is that you do not trade the news till you become a seasoned trader. That is the problem, because what happens with news is generally there's a spike one way and then it spikes the other, which means that you've been triggered in and then triggered out, and you end up losing your money. And that's the problem with trading the likes of news. Now, if you have something the likes of, for instance, McDonald's last year, right? The CEO got sacked for doing stuff he shouldn't have been doing. And that was the only reason he got sacked. And the silly thing about it is that the share price didn't change, the earnings didn't change, anything didn't change. And all of a sudden, the stock actually plummeted. It came down to a really nice level. Now, when I looked into it, the only thing that had changed was the CEO. And the new person they were bringing in, I had a quick look at it. Anytime he jumped into a company, they have progressed on. And then it was very, very simple then to jump into McDonald's and take a trade along. And was in that there till March there when the coronavirus tipped off. And then I jumped out of that trade in most of my positions, except 2, Apple and Microsoft.
Okay. So I guess, yeah, you got to be careful when you're a novice to look out for the details that you might not be thinking of looking out for.
But the easiest way for a novice to trade would just be literally long term. Is to buy something with the goal in your head that this is long term, and forget about it, and then come back and buy some more, forget about it, come back, buy some more, forget about it. But in between that, you're doing some education, whether it's the free trading course on eToro, or whether it's you're just watching YouTube or whatever, and get some education while you're doing this. Because the idea is, if you buy the underlying stock and you hold on to it, stocks are generally designed to go up, because what's the stock's only goal is to generate more revenue. Next year, more revenue, more revenue, more revenue. And if that drops, then the stock will depreciate. But the idea is that if you get sound stocks like the FANGs, the top 5 companies out there, the likes of Facebooks, the Apples, the Amazons of the world, they should continually go on because the demand for them is getting higher and higher and higher.
Mm-hmm. Yeah, I suppose for a lot of people, it's more difficult to look in the long term, given where we are and given the situation that they see. They're seeing all these shops closed. They're seeing people losing their jobs in America. Tens of millions of people are just all of a sudden out of a job because of the situation. So I suppose they see that and they think, well, I guess everything just must be tanking. It's just game over all over the place. But actually, that's not what we're seeing, right? We're actually in the middle of a rally. Correct me if I'm wrong. So for people who are just feeling like what I'm so confused about what the market is basing itself off of, where are the connections, where are the links, which part is the actual economy that matters to me, what should a novice trader do when they're struggling to find some clarity?
Okay, so rather than answer that question, I'm going to sort of interview you now a little bit. So have you ever traded before?
No, I don't personally.
Okay, so investing in airlines, would that be a good investment at the moment?
No,
Yes or no?
I
Perfect.
wouldn't. No,
Investing in some sort of tech at the minute, would that be a good investment?
I would say yes, but I'm also in
Perfect.
fintech.
Well, but the problem is that people don't put that logic into the market.
Okay.
Okay, so first and foremost is that travel, airlines, stuff like that there has just depreciated, massively dropped down. Something that has taken off is tech. You have Netflix, you have Zoom, you have Apple, you have Shopify, you have all these tech companies that have just risen massively. Why? Because they're relied on throughout this pandemic. Okay, and it just shows the reliance we have on tech, and that's something that has grown exponentially. Whereas people will just jump out of the market and go, "Oh, I'll just hold on to my money. It's safe. It's stuff like this." But for me, when we had that pullback in coronavirus, I was loving it because I wasn't in a position in the crash in 2008 to be able to avail of that. I've now seen this crash, and I'm looking at it going, thank God. Thank God. Why? Because I'm now able to start buying up the stocks again. I'm now able to buy stuff at a massively cheap. So you have the likes of Apple. Apple, it was $1 trillion company, was at a record high, and then it dropped 40%. Now, do I think Apple will reach that height again? Absolutely. Why? Because the demand on their product is huge. So now I'm getting a blue chip company that is top of the range at a 40% discount. Does that make sense?
Yeah.
Whereas if you ever hear Warren Buffett talking or watch any or read any of these books, you never followed scared money. And what happens with scared money is people pulled out of the market. Whereas me as an investor, I'm looking going, oh, this is brilliant. This is brilliant. We'll come down a little bit further, and then I'm in with my positions. And that's the and the problem is that you will never ever catch the bottom. So some of my positions did go down, but as it turned, it hit the bottom. Like you said, we're now in the middle of a bull run. Now that bull run is sort of a false bull run because we have the quantitative easing that's after happening. Now, what quantitative easing is the governments have bought up bonds to get the market stimulated again, to get everything moving, the economy moving, which means then that this is not a real bull run. It's more from quantitative easing. Now, as you see, we talk about Warren Buffett there, and his company is Berkshire Hathaway, and they are sitting on billions of pounds at the minute. They haven't jumped into the market yet. And the reason they haven't jumped in yet is because it's one of these false runs. But if it continues going the way it is you will start seeing all the rest of the money that's been sitting on the sidelines jump in. Why? Because we're now almost at record highs. The NASDAQ is literally 1 or 2% away from the record high at the moment.
Well,
So it's literally after recovering.
so I guess the volatility shouldn't scare people off. They should just have their strategy and stick to it.
Oh, absolutely. That is absolutely key, is that you have a strategy and then you sit through it. It's as like I say, unfortunately, 10 years ago, in 2008, when the last credit crunch happened, I was a qualified carpenter. I was putting roofs on houses. And from that point, buildings stopped, economy stopped. We went into recession and I had no work. Now it really makes no difference to me whether I'm working or not. Why? Because I can make some money out of the markets and trade them. And the idea is once that all dropped down to a low, just buy it up absolutely buy and invest as much into companies that are trending nicely, but have retraced down. Where the likes of, we talked about the airline industry. A lot of those airline industries are being in a downtrend for the last 2 or 3 years anyway. So they are not the likes of the charts that people should look at as the likes of MasterCard, which has been rocketing up. And then because of coronavirus had a drop of about 60%. And now look, it's starting to go up again. And once you start seeing the shoots of growth, of new business coming in, that's where we're looking to jump in on. And that was to just give one example of a chart, yes. And just to give you a heads up, that's not a tip. That's just a little bit of advice.
Okay. Well, I'm sure people love advice. I'm sure a lot of students are considering. I get a lot of friends who ask me, should I trade? Like, I'm wondering, is it smart? Am I going to get scammed out of all my money? So I guess, for people who still have some doubts about, is it really gambling? I'm sure you get that question a lot. Like, is it gambling? Is it just a casino? What would you say to that?
But people ask me about gambling all the time. If you ever speak to a rich person, how many revenue streams do they have?
Many, I'm sure.
Okay. How many revenue streams do most people have?
The one.
One. Okay. Absolutely. So the problem is that you're speaking to people who have one revenue stream. So once you speak to the millionaires, people who have money, people who've amassed wealth, they will say to you that you have to speculate to accumulate. Now, when we say that, we don't mean that you go on and you put all your money into all your eggs in one basket. As people always ask me, Henry, is it gambling? Is it this, all this sort of stuff? Now, the answer to that is it depends on you. So if you have 10 grand sitting at home under your mattress or in the bank doing absolutely nothing, and people say to me, oh, Henry, I have 10 grand, I could put that in. And I go, is that your life savings? And they'll say, yes, it is. Well, then take that 10 grand out of your trading account and put it back in your bank account. Leave that there. You should leave that there because that's your nest egg. That's your rainy day fund. Now, what I recommend that people to actually do is that at the end of every month, we have a little bit of money left over. Now, that little bit of money, just imagine it's 500 quid. Divide it in half and use 250 for whatever you want. And then the other 250 goes into your trading account. Now, you were going to spend it anyway. That wasn't going to go into savings. That was going to be on nights out, shots, whatever it was that people do, wherever they spend their money. It's going to go on whatever it is. But chop it in half and then put the other half into something. And the easiest way to trade is buy up some stocks and just let them run, let them go. And all of a sudden, over a long period of time, you then grow huge amounts of stocks there, even though you weren't trying to. Does that make sense? And that's the simplest way to trade. And you still have your rainy day fund if the roof starts leaking or you have to go away on holiday or something happens like the likes of coronavirus and you have to pay rent. You still have that money there. And you're not going near your stock portfolio. And that's the problem. And but people don't trade from logic. They go, I have 10 grand. How do I turn it into $1 million?
Right.
And that's not how anyone should trade. You're watching too much Facebook, too much Instagram, stuff like that. You're watching all these ads of people standing beside Lamborghinis that are rented.
Wow. Isn't that an allegory? I'm sure. Yeah, I see. So I guess what you're saying is don't make that your last resort. Don't be like, oh, all of my eggs need to go in this basket and fingers crossed it pulls through so I can pay the rent this month. Absolutely.
You put money aside that you can afford to lose, that you don't need, that there's no want for it, that you can go and pull that out in 5 or 6 years' time if you want. You can let that run. There doesn't have to be an end date on that. But what happens, people put in their money and go, oh, I can leave that in the market for 2 or 3 months. But just imagine you put your money in the market in February or March. We then had this big drop down, but you had to pull your money out at the end of March. You would have been massively down on your 10 grand. Now, if you had jumped in at the bottom of March, now you'd probably have doubled your money by now. Does that make sense?
Yeah.
And there's nothing in between. Whereas what I'm showing you is that the in-between bit, you can survive as it's going down because you don't need that money. And as it goes back up, perfect. And you're now at the minute where the top prices are, the stocks that you get into top are now in money. The stuff at the middle are in money, stuff at the bottom are in money, and that's the idea, is to grow it. Dollar cost averaging is actually the correct name for it. So anyone who doesn't know how to use that there, just Google that strategy, it'll come up. The idea is that you invest in some stocks once a month or once a week or once every 2 months, but it doesn't matter where the price is, you just invest at that specific time, the same amount of money every month.
Mm-hmm. Okay. Well, like savings, I guess, or like retirement.
That's the right idea is that you're saving for your retirement. It's literally a savings account. Mm-hmm. Now, I say to people, I can show you how to potentially make money over 10, 20 years. People go, really? That long? And the idea is yes. And then once I show you other techniques and get your skill set better, then you can drag it back. You can pull it back. You can pull it back, and then you go from there. But it's all about you educating yourself. Mm-hmm. So everyone in UCL, they're in uni, and they're potentially doing between 2 to 4 year courses to get into a job, into an area where they want to work. But the problem is people put 500 quid into a trading account and expect to double it or quadruple it in a month. But you've never done any education. Mm-hmm. And that's what I don't understand. For me, there should massively, massively be some sort of curriculum in school, in secondary school, for people, money management, massively.
Mm-hmm. Yeah, well, hopefully we'll be picking up the slack as UCL Fintech Society and helping people get that education as well from our end. We'll do what we can. But you've definitely spoken a lot about stocks specifically. I'm kind of curious, you think stocks in specific over gold, over crypto? Let me pick your brain a little bit about that.
Well, the thing about gold is gold has always been the safe haven against the US dollar. Mm-hmm. So back years ago, what they did is they printed enough money, and then they got the physical golds and put it into Fort Knox and put it there. So that means then they had the same amount of money in circulation as gold. So gold was the reserve. Now, as time gone by, there's been more and more money printed, the likes of quantitative easing, so on and so forth. So some people say it's diluting the value of actually the fiat, but some won't. Then you have the likes of gold, which is a finite resource. And the thing is that it peaks and troughs. There's massive waves in it. When US dollar is under pressure and weak, gold gets stronger. When US dollar is stronger, gold gets weaker. So they have the divergence effect, so that they go in the opposite directions. Mm-hmm. And that's something that people sort of don't understand. And then you have the emergence of the cryptocurrencies. So the cryptocurrencies were a massive way of actually working out and finding another income stream, another way of getting in here. Now, I'm someone who's a big advocate for technology, and some of the technologies on the blockchain and Bitcoin and XRP and them all, there's huge, brilliant technology there. Now, will any of those be the digital currency that we go into? Who knows? Probably not. We'll probably end up having some sort of cryptocurrency that's much easier to use, much faster transactions, and just much more streamlined. But remember, these are the guys that are opening the door for the likes of them to come through. So at the minute, yes, there's loads of opportunity in the markets. And we had the Bitcoin halving that came up there last month. And, you know what I mean, there was huge anticipation, and then nothing really happened.
Mm-hmm. All right. So I guess for novice traders, keep their ears to the wall, I guess, and you know, keep an eye on everything where they can.
But the thing about it is that you sort of have to pick an area that you want to go into.
Okay.
Do I think gold at the present moment is overvalued? Massively, yes. Mm-hmm. But remember, with you just said it, with the unemployment rate in the US soaring, stuff like that, there, people are pushing their money into safe havens, which is gold and silver. Now, we were actually expecting a lot more of people doing that with the likes of crypto assets. But it hasn't happened as much. We were expecting with the likes of the Bitcoin halving, with the dollar getting stronger, we were expecting a little push to the upside, and Bitcoin is failing to break that 10,000 mark. Mm-hmm. Now, if you're an avid of technical analysis, there's a triangle setting up there now as well, and that's a huge, huge way of actually trading the crypto market is using triangles, and there's a big one there. And for me, looking at it now, the longer it stays at that 10,000 mark, the more pressure it is to the downside. But we'll see. Only time will tell. If a whale comes in with some money, then all of a sudden Bitcoin rallies and drives to the upside. And the same to the opposite. If a whale comes in and drives the market down, then it will continually go down, because the likes of the crypto assets is literally down to supply and demand. Whereas we see with the stocks, and we saw with the currencies, as they are manipulated by governments and by banks and by people. Why? To try and keep things affordable for people.
Yeah, and I suppose along those lines, if I had to ask one final question as we prepare to move on to the next speaker, I guess the question would be, do you think when people are considering, now that a lot less people have jobs, career outlooks are looking a little bit shakier, do you think when people are looking at their last, little bit of money left at the month, it's definitely worth it to put that into stocks and trading, would you say?
Look, if you've lost your job and that's the last bit of money you have much better uses for it than trading. So if that's the last bit of money you have, or your last little bit of investments, and your job's uncertain, I would not suggest anyone put that into trading, because that's needed for your rainy day. But if you have a job that's pretty secure and you are carrying on, but you're in that rut, you're in that mundane, that you literally have a small bit of money left over at the end of each month, stuff like that there, the idea would be then is to educate yourself on potentially trading or another way of generating a secondary revenue stream. And once that second revenue stream comes, then you slowly can start taking money from each revenue stream and go, okay, well, now I have two incomes coming in. Potentially, how do I push on to have a third where I'm not in a position like this anymore? And then potentially the money that you're making from the likes of stocks or FX or indices or crypto or ETFs for that matter, then you can potentially take that and fund a business. And then when the business up and running, then get back and start trading and building your stock portfolio again, and investments, whether they're ETFs, whether they're buying solid cryptocurrencies or the real crypto, or whether it's buying the underlying asset with the stocks. It's the problem is that, like you said there, your last bit of money, your job's uncertainty, that's when people try to get into trading from fear, because they have no other option. But that's the opposite to where we should be getting into trading. We should be getting into trading when we have a little bit of disposable income, that you don't need that you can actually trade. Okay, so, and that's where we should be coming from.
Okay, so if that had to be your final takeaway here, as we have 1 or 2 minutes left, would you say that it's be careful and educate yourself and don't put all your money anywhere?
But that's it. That's at the end of the day is the one thing that massively lets people down everywhere. It's not just here in Britain. Is that we need more than one revenue stream. Everyone needs that. They need 2 or 3 or 4 revenue streams. But the problem is that people are so focused on their job and relationships and life and stuff like that there, that they get comfortable. As people, human beings, we get comfortable. We follow routine. So then you get into a routine and you start living within your means. And the problem is that people need to then have a little more drive, a little more, what would you call it, business mind, and then start generating a secondary income, whether it's through business, whether it's through currencies, whether it's getting a second job, whether it's through trading the markets. And that's what we should be looking to do. So everyone should absolutely educate themselves, because that is number one, the biggest reason people lose money in the markets. That's it there. That, education is key. Know your audience and make sure that you know what you're trading. And once you know what you're trading, then you can kick on from there. And trading is not hard. The psychology behind it is the hardest part. So trading is not hard. Psychology is that your trade is now losing, then it's winning, it's losing, it's winning. And then, do I jump out? Do I stay in it? And that's it. That's the hardest part, because we're so emotionally attached to our money. So yes, education is key. And then when you have your education done, then start investing.
Great. So I guess with that, thank you very much, Henry Ward, for giving us some insight, a little bit about the markets, a little bit about the macro as well. So I guess I'm just going to thank you very much, and then hopefully we'll see more of you at UCL Fintech during this upcoming year.
It's been an absolute pleasure, and I'm sure to be back. Yes.
Thank you so much. All right. Thank you, Henry. So now we're going to be moving on to our next and final speaker, who will be speaking on our next and final topic. So our final speaker for today is going to be Zach Lambert, who is working at Growth for Plaid here in the UK. So Plaid is originally an American company that offers an API to help people basically consume more easily, to make money easier for both consumers, banks, and then third parties. So if you've ever used Monzo, TransferWise, or Coinbase, it's actually very possible that you've used Plaid yourself without knowing it. They work on the back end, allowing consumers, banks to connect to the services that they might want to use. So here to tell us more about Plaid and what open banking is and how Plaid fits into that in general, Zach Lambert, please welcome. Hi, how are you?
Hey, I'm great. How are you doing?
I'm doing great. So thank you for being here. Super exciting to have you on. I'm personally very interested in open banking. I have a Revolut account. I have a Monzo account, and I'm just really interested in the ways that, we can move away from some of the more cumbersome processes that we used to have into a more flexible, dynamic way of spending as a consumer. So I'd love for you to quickly describe what it is exactly Plaid does in your own words. I gave a brief introduction earlier.
Yes, you did a good job. At a high level, Plaid is a routing layer for fintech. So our job, as you said, is to make money easier for everyone. So we act as the central point that connects your bank account to the things that need to use it for whatever they need to use it for. So whether that's to add money to an account that you have or to view your transactions and help you budget, we want to let the companies that do those things focus on doing those things and handle the actual piece of connecting the bank accounts ourselves.
Mm-hmm. And I think it's really easy to forget because it's on the back end, the scale of what you guys do. You guys have already analyzed over 10 billion transactions. Am I right in saying that? So there are some numbers happening.
Yeah, I think at this point, about 1 in 4 consumers in the US have connected a bank account with Plaid. And we work with about 80% of what we call the fintech market. So folks that are also aligned with our mission in helping end users, whether that's in like a B2B case or an investing case like eToro or something else along those lines.
Mm-hmm. Okay. Great. So I mentioned earlier open banking, and I don't think I ever defined exactly what that was. Do you think you could do that for me? And then what exactly Plaid does, although I suppose it might be a little bit self-explanatory, but what Plaid does to fit into that?
Yeah, no problem. So open banking is at a high level the UK specific implementation of PSD2, which is a regulatory package. The basic driving force behind open banking is the idea that consumers own their data. They should be able to do what they want with it, and they should be able to permission it safely and securely to the apps that need it to use things to make their lives better. So it's a standard that banks have built to say, hey, we will open up our data to anyone that can consume our API is regulated and works in the industry. And Plaid takes that data, simplifies it down to a set of a few APIs. And then routes it back out to our client base.
Okay. So if I'm just a consumer, could you give me an example of what open banking has changed between how I would do anything before and then what my life looks like now? Like just an example.
Yeah, sure. So if I used, Clio, for instance, to help me budget and to set my weekly expenses, before open banking, I wouldn't have been able to authenticate directly with the institution. I might have had to remember a few different credential fields, and the institution's connection might have been somewhat brittle before the regulatory package. Mm-hmm. Now I'm able to authenticate in the app directly, redirect to my Revolut or my Monzo banking app, and connect my account to Clio that way so that they can manage my finances on the back end.
Mm-hmm. So just to summarize, I give consent to my bank, and then my bank is just giving, any of the services or products I use direct access instead of having to wait and, I have to authenticate every time, right?
Right, or like uploading spreadsheets of transactional data. It's a clear consent that lives directly with the bank, so that you don't have to think about the actual process of connecting your account to anything. Mm-hmm. And you can just focus on like the pure value prop of what they're doing.
Mm-hmm. And so you mentioned that open banking is the UK implementation of PSD2. Could you explain to people who might not know what PSD2 is, and then how that differentiates from, you know, the environment in the US, for instance, which is your native environment?
Yeah. So definitely moved over from the US in April of last year. So I've been here for a bit now learning about PSD2 and various European regulatory packages. PSD2 is basically something that, as I was saying, codifies the right that consumers have to own their own data, right? It's not owned by banks. It's not owned by us. It's not owned by any of our clients using it. It's owned by the consumer to do what they want to do with it. PSD2 really codified that and put down in legislation that consumers and small businesses alike have the right to access their banking data, that it's theirs and they can do what they want with it. So PSD2 itself writes that somewhat at length, being a legislative document, but that's the core principle. It was an awesome foundation for fintech. The concept of consumers owning their own checking and current and savings accounts and being able to do what they want with it is super helpful. And we really see it as like a first step toward part two. So we have open banking right now. We would like to have open finance down the road. So not just your current and savings account, but your investment accounts, any types of debt that you might have. Anything else that, you know, a creative value proposition by a developer who could do something to make your life a bit easier could work with. Okay,
cool. So, well, that's great to know. Personally, I was born and raised in Europe. I don't sound like it, but I am actually a European. And I've got to wonder, it's so handy that that's codified into law here. Is that the case in America, or do you have to work differently over there?
Yeah, so it's not the case in North America. Open banking is something of an uppercase concept in Europe, and it has already gone through the legislature. I think the conversations around lowercase open banking are evolving in the US and Canada. And it's not like at the same point in regulation right now. So there's nothing really strictly guaranteeing the right to access your data in the US like there is in Europe. And like that specific foundation of regulatory clarity has been really helpful here.
Okay, cool. Well, then I'd love to move on to a little bit, because PSD2 has been implemented for not that long, but I guess in terms of financial regulation, it's been practically decades. It moves very quickly. But I'd love to talk about, you know, we're all currently in the midst of this pandemic, obviously different stages depending on where people might be. But I'm wondering, Hello. Sorry about that.
Oh, no.
I've cut out a little bit. I'll just ask that again. But,
everyone has to deal with unreliable Wi-Fi to a greater extent the last few weeks.
Definitely the case. It's not easy. But as I was saying before I was conveniently cut in, but I'm wondering, how does this pandemic influence the work you guys, hopefully not just unreliable Wi-Fi?
Yeah, definitely that is definitely an element. I think we see this as like an acceleration of a few trends that were already happening, right? Habits don't change overnight. They typically take many years to change. This is a scenario that compresses many years into quite a small number of months. So, you know, consumers rely on a vast sort of world of different things to manage their personal finances. One large part of that that young people don't typically think about is the bank branch. Most bank branches are closed right now. So the minds of consumers that have like a set process and have done something for the same way for a long time are now completely confused and need to change that. So we're seeing adoption increase at a faster rate than would be the case in a world without COVID. And then the other main point is that the trend of everything becoming a fintech is accelerating somewhat. Like I said, there's a huge market opportunity since all of the services that are traditionally offered like in person via branch or via some defined process that you at some point in your life used are changing. The way that you spend money is changing. So in much the same way, it is a new experience for people that shop in a grocery store to order that online. The payments world is changing similarly.
Okay, that's really interesting to hear that it's actually speeding up adoption, which I'm sure for a lot of us already using services like Revolut or Monzo, maybe it wasn't something that we were thinking about, but I guess this is impacting more those other demographics that were hanging on until now they physically can't anymore. Would you say that there's a difference between, in the UK and the US, the areas that you're familiar with so far? Like, is there a difference in adoption? Would you say someone's faster than someone else?
I wouldn't say that like one market is particularly faster than another. I will say that like one trend that you're seeing right now is that a lot of neobanks formed in Europe and are currently looking to open in North America and the US. So they're getting themselves familiar with the market and the regulations, and might have a decent opportunity to really build their brand and start to get familiar with who their customer base will be. Since a lot of the people that are opening their first bank account right now won't have access to do so at the branch that maybe their mom and dad did in the years before.
Yeah. And since you guys do most of your work basically working with startups and fintechs that tend to be smaller, do you think that in this environment where money is a lot tighter, it might be tougher to source investments, or it might be tougher for people who have ideas, who want to start companies, to start them? Do you think that you're going to struggle in the fintech space in general rather than just Plaid? But do you think we're going to start to see a slowing in the rate of new fintechs and new ideas?
I don't necessarily think we're going to see a slowing in the rate of new ideas. I think we're at a pretty fertile ground right now for new ideas, specifically in that like the day-to-day operations of our lives have changed in a way that they hadn't changed in the years prior. So there are a lot of things that we now need to do that just weren't needed before. And a lot of those things have to do with finances. If you look at like small business loan administrations and the speed to disbursement of those, that's one place where we're actually seeing more fintech adoption, and smaller companies are sort of disrupting larger incumbent banks in the lending space there. Because for economic stimulus in the US and the UK, a really key element of that was like, how quickly can you get money out the door to qualified customers? And to no one's surprise, after thinking about that for a bit, a lot of the smaller, more nimble, non-bank fintechs were the ones that were really well equipped to do that. So I don't think there's necessarily a dearth of new fintech ideas out there. I think they just might take place in a slightly different manner than they would have otherwise.
Okay. And since you guys are working with so many companies at the same time, I'm curious, is there a particular industry? Like right now we're talking about neobanks, but do you think there's space for other types of innovation where Plaid might be useful other than just, consumer retail? Or what do you think that looks like for you guys?
Yeah, certainly. And it's hard for us to pick what that actually is. I would say one thing that we are quite militant about is supporting all use cases that potentially live on top of our platform equally. We don't pick verticals. We try to serve all of our customers. And the way that our product roadmap ultimately gets made is in listening to what those customers ask of us. So if we see a trend in like asks across customers, across verticals, that might be something we get more involved in over time. But nothing particular.
Okay, cool. That's kind of interesting to hear that you guys are basically just open to working with anything that might be useful, like any applications that people might find useful to see you guys in.
Yeah, I think the bank account is the hub of your life. That sounds obvious to say, but it operates in ways that you typically don't think about. Right. And you need to connect it to a lot of different things to make a lot of different elements of your life come together. So you need to use Monzo to pay your friends when you guys go to a restaurant, when you're able to go to a restaurant. If you also needed to run a small business, you need to connect to some type of accounting software to do that. That could help you with things like tax and payroll. And then, you also needed to watch your investments and put money into the market. So all of those things look super, super different on surface level. If you dig down a couple of layers, they all require pretty similar functionality in terms of like needing to know certain things about your bank account. So they look fairly similar to us inside out, but the consumer facing props are very different.
Okay, that's interesting. And so before we were speaking a little bit about how the environment might be different from a regulatory standpoint in Europe versus in the US. And I'm kind of curious to know, since you're working specifically at growth, is there a difference in the way that Plaid has been approaching driving growth in the UK or in the rest of Europe as compared to the strategies initially in the United States where you first, were conceived?
Yeah, I don't think so. I think one of the things that we consider more now than we did or than we currently do in the US is that we are a much smaller player here. So we are able to move pretty quickly because we are new here. We are able to listen to our customers pretty quickly, again, because we don't have the same 1 in 4 users have connected their bank accounts statistic that we have in the US. So I think the two pillars of that, of driving growth, are one, listening to our customers, figuring out what they want. We get really, really good feedback from small companies and big companies. It's not like a given for us that a 1,000 person company will have better ideas on what to build for us than a 1 person company. We take all the feedback we get pretty seriously. And then, like we were just talking about, now is a great time for new fintech products to be created, right? There are use cases open that haven't for a long period of time. And the hardest thing to do in like driving new product creation and figuring out what to build next is changing consumer habits. That is just not a thing that you can count on. But consumer habits have been changed by forces out of our control. So I'm excited to see what comes on top of that.
That will be interesting to see. And as you are coming in, we were speaking to an earlier speaker a little bit about companies that are growing a lot, and they struggle with things like hiring in space. I've seen that you guys are hiring. Do you think that is hiring going to be like a really big point for you guys as you continue to expand into the UK and Europe?
Yeah, definitely. Hiring is really, really important to us. Everyone takes it very, very seriously and spends a lot of time on interviews and giving feedback and sourcing the right people. And then again, we listen to our customers in product development. We also realize that we need to listen to the markets that we're in terms of who to ask and where to build those products, right? So hiring people that are familiar with the UK landscape is important and have been in Europe for a long time is great. So just finding the right mix of people that come in and have the right backgrounds and ask the right questions.
Sorry about that. My Wi-Fi has let me down again, which is fun. But sorry, I didn't hear the tail end of that. But I got that you guys are focusing on that a lot and trying to listen to, trying to adapt to the current market. So you're looking for people who have some idea of what the landscape looks like in the UK as well as in Europe. So I'm wondering, is that like something you would look at, for instance, for a lot of people who are watching might be students and they're considering, what do I need to be learning? What skills do I need to have? What interests do I need to have? Would you be looking for someone who tends to spend a lot of time learning about their environment, wondering about technology and innovation? What kind of thing would you be looking into?
Yeah, to be honest, it varies a little bit case by case. No individual candidate is the same. We're just looking for people that are curious, are smart, and maybe have an interest in Plaid and what we do. So we're always willing to have a conversation with people that apply and sort of talk about what the market looks like.
Okay. And you did mention that consumer habits are changing. Do you think that is probably the biggest way that that adoption will be pushed forward, it'll be through this particular thing? Or do you think that consumer habits will change really gradually, and then by the end of it, this won't be really a distinguishable factor?
Yeah, so top line, I don't know. We can have sort of suspicions about that. I don't think that like post-COVID, the bank branch will just like forever change and they will never reopen. I do think now is a great time for all of our customers and the companies that we work with to have a chance to prove the value that they offer to users that might not have considered them before, right? Like the apps that sit on top of us all have calling cards. They all make someone's life easier or save them money or save them time. And they're able to do that for like their user base that they acquire. And that denominator for like people available looking for services to make their financial lives easier right now is much bigger than it has been maybe in more normal times.
So would you say that more regulation is necessary, or do you think, like you're saying, people are kind of adopting new technologies as it happens, and then this is kind of helpful for that? Or do you think that regulation as it stands here, like with PSD2, do you think that that's kind of got just like the perfect environment, or is there more adapting that regulators need?
Yeah, definitely. It's sort of the thing that we talked about at the beginning. Open banking is awesome, and it is great that consumers have reliable access to their current and savings accounts. We sort of see that as like an evolutionary trend in that like today they are able to manage their current account and their savings account. Tomorrow, it should be enshrined that they're able to manage all of their finances. It shouldn't matter whether those are current accounts, investment accounts, student debt. We really believe strongly in the ability of consumers to own their data and for developers to have the ability to build things that benefit those consumers. So definitely see it as an evolving trend.
Okay. And then more on the cultural side, I guess I'm personally kind of curious about this. Having just moved over from, the United States, I'm wondering culturally, is the business different? I know a lot of Americans say that, people in France, for instance, I used to live there, tend to be rude and they don't like to talk to them or things like that. Are there any, business culture things that you think entrepreneurs or people interested in working internationally might want to know about?
Yeah, I don't know if one specific thing jumps out. I think the markets are certainly like all a little bit different in terms of preferences, from like a product design to all of the more cultural elements that tend to differ company to company. I will say, like at Plaid, we do a good job of setting an inclusive and strong culture for all of our offices. I moved 5 hours ahead in time zone, and I don't feel like I've taken a material hit in terms of like the ability to communicate with my coworkers and my day-to-day involvement in their lives. So I think internally, we do a really good job of making sure all of the offices are connected. And then externally, so much of our jobs anyway is listening to what our customers say, and all of their asks are quite different, that like we don't see a ton of geographic trend on that. It's mostly just like all of our customers are somewhat unique. They all want slightly different things from us. We should take them all seriously.
Okay. And so what would you say are, maybe for Plaid in specific, maybe in Europe or maybe in general, like moments where you felt like this is a milestone, like we've really been successful? Like there are some companies that you've worked with on your website. Are there any of them that you're particularly proud of? Any partnerships in specific?
No, nothing in specific. I mean, we're really proud of all of our customers. I think particularly, like I was saying, it's not like we don't value companies with thousands of employees feedback differently than we value companies with 2 employees. Like the core thesis for how we build things is that it matters what the developer experiences when they integrate with Plaid. So all of the feedback is important. In terms of like overall milestones, again, we've been enabling open finance in a lowercase way for years in the US. Come a really long way there and gotten to work with some incredible companies. I think it was an important milestone for us, roughly a year ago now, when we first launched in the UK and started expanding into Europe. But again, we're much smaller over here, so we're really excited for that to be like the first initial milestone.
Okay, so do you think then that Plaid is looking to go even further than Europe afterwards?
No concrete plans at the time or anything.
All right, focusing on Europe for now. Well, that's exciting. That means I get to do more cool things, so that's fine with me.
Yeah,
For the focus to be here for now.
yeah.
Yeah. Oh, that's exciting then. And you did bring it up before that the culture is really good and that's important. And I guess I'm wondering because a lot of people, especially who are interested in our society, because we tend to be a career society, tend to be thinking, do I want to go into a more conventional career? It'll be easier to explain over, to my parents at the dinner table. I won't have to answer any confusion or anything like that. Or they're thinking, do I want to move into something that's more like fintech? So for someone who's like consulting, investment banking, or do I want to move into something like Plaid? How would you sway them away from, I guess, the more conventional choices?
Yeah, I wouldn't try to sway them away from more conventional choices. I would say like whatever you do be something that you want to do and you're really interested in it. Pull out the threads that you think are interesting. In terms of like how I personally think about what we do at Plaid, I think a lot in terms of like impact. It's really cool to see a customer that doesn't have any end users get really big over a year or two. And be able to say things like, they save their customers on average 20% of their budget per week, or they're able to give like 1% cash back on purchases or things like that. So a lot of our customers have been able to do that. We have been sort of on the back end of them being able to do that. And it sort of all goes to our mission of making money easier for all of our end users.
Okay. Well, I feel like I think a lot of people have learned a lot more about open banking, and I think there will be some people typing Plaid into Google now moving forwards, especially hearing that you're hiring. I think for a lot of people, that's an interesting thing to consider. But if you had to leave any final takeaways, I guess, with the students who might be watching or some people who might have companies and are considering maybe they should be partnering with Plaid, if you have any final takeaways, that would be interesting to hear.
Yeah, it's definitely interesting. My biggest takeaway, like I was saying, is like follow what you think is interesting, read as much as possible, and then ask questions whenever you're able to. We love getting like feedback from people that are or are not using the product on like what's good about the site and what would you change. And like as long as you're speaking passionately about something that you're actually interested in, that's really useful for us to hear. So don't be afraid to reach out. All questions are good.
Great. So people can find you, I'm assuming, on the website, on social media, or?
Yeah. All places.
Great. Okay. Well, then with that, I think we're happy to thank you very much for having been here to speak with us. I hope a lot of people will then go find out some more about Plaid. I personally think it was really exciting. And hopefully here at UCL Fintech, we'll be hearing more from you and your team during the upcoming academic year. Fingers crossed, there'll be some more normality, so it'll be easier to organize things. But for the moment, we'll be putting this up online as well, so more people can find out. But thank you so much for being here, Zach Lambert from Plaid.
Awesome. Thanks for the time. See ya.
Thank you, Zach. So just to quickly talk about what comes next, we'll have a graphic come up that'll explain, who'll be speaking during the next session, what information you can find out. It'll be about crypto and blockchain. So if you're interested in that, or if you're interested in learning more about that, then, hang out and come check us out. So just thank you to all of the speakers, Amy French from Level 39, Henry Ward from eToro, and Zach Lambert from Plaid. They've been really, really great to come and speak with us today. And I hope everyone learned something new and interesting. And thank you, obviously, to our team who's been working on the technical side. And hopefully we'll see you guys next Monday. Thank you.